Hello.
Yeah.
Sir, start, sir.
Yeah. Please enable the sharing, screen share. Hello.
Yes, sir.
Yeah, please enable me screen sharing first.
Yes, sir. We should enable screen sharing for you, sir.
Yeah.
Yes, sir. Sir, you are the co-host now.
Yeah.
Yes, sir.
Yeah, good evening. See, in the previous session, we have learned what is operating lease. See, there are two aspects in accounting standard 19, that is finance lease and operating lease. In the previous session, we have learned what is operating lease and how the accounting is done in the books of the lessee and lessor. Okay. Now let us see what is finance lease. We have seen the definition in the previous class itself, that finance lease means the lease transfers ownership of the asset to the lessee by the end of the lease term. Okay. These are the conditions which can be concluded that a lease is a finance lease. Okay. Main, you have to see at the outset, if you see, if the asset is going to be, the ownership of the asset is going to be transferred to the lessee, then by default it will become a finance lease. Please note that. Okay. Or at the end of the lease term, if there is very nominal amount is fixed, where it is always being exercised by the lessee to buy the asset, then it is a finance lease. If during the economic, if the lessee uses the asset for the entire economic life of the asset, then it will be considered as finance lease. Other one is if the minimum lease payments are almost the fair market value of the asset, leased asset, then it will be considered as finance lease. See, it is only nothing but you are buying the asset on installment basis. It is in simple words to say. That is what they have given the definition, explanation how, where, which situations you have to consider a lease as a finance lease. And they have given some other 3 indicators also where it should be classified as finance lease. This we have discussed in previous session. Now I will go to the finance lease, okay, and how it has to be shown in the financial statements in the books of the lessee. Okay. See, you may feel why I am reading out, but it is important to understand the standard as it is. That is why I am reading out. Okay. At the inception of the finance lease, the lessee should recognize the lease as an asset and liability. Please note that the lessee should, in case if the lease is a, now we are talking only finance lease. Okay. So in case if the lease is a finance lease, then the lessee should recognize the lease as an asset and liability. The standard says. So once it is finalized that this particular agreement is a finance lease, then it should be treated as an asset and liability. Such recognition should be at an amount equal to the fair market value, fair value of the leased asset at the inception of the lease. Please note this, at the inception of the lease. Suppose what it means, suppose we will see the example also where you will understand more clearly. This is given in the standard, example is given in the standard. What it says is, at what value the lessee should recognize it as an asset and liability, and when it has to be recognized is at the inception of the lease. Suppose today the lease period is beginning, then today the lessee should recognize that particular asset as asset and liability, not after the lease period is over. Okay, see, when the actual ownership will be transferred is at the end of the lease term. But because these conditions are getting satisfied, we have categorized it as a finance lease. That means the asset is going to be anyway taken by the lessee. So that is the reason it has become finance lease. By virtue of finance lease, the lessee should recognize that particular lease as asset lease itself, it has to be recognized. Suppose if I am recognizing, if I have taken an asset on lease, then today that asset will become, that property will become my asset, and whatever lease payments I am supposed to pay over the lease period will become my liability. However, exceeds present value of the minimum lease payments from the standpoint of the lessee, the amount recorded as an asset and liability should be the present value of the minimum lease payment. Suppose if the fair value of the asset, okay, say you have purchased one machinery for 10 lakhs, okay, and the lease amounts which are spread over 10 years or whatever it is say 12 lakhs, 13 lakhs, something like that, every year 1 lakh, 1 lakh, 1 lakh 10,000, something like that. If you bring down the future lease payments to the present value, see, this year you will pay 1 lakh, next year 1 lakh, third year 1 lakh, fourth year, like that, you will pay say 13 lakhs or 14 lakhs. Then you have to bring it down to the present value of the minimum lease payments. These are the minimum lease payments which are mentioned in the agreement. Okay. So if you bring down the lease payments to the present value. How will you bring the present value? By discounting factor. The discounting factor is nothing but interest. See, suppose I am a shopkeeper and you have come to purchase some machinery. I will say, if you pay me cash today, I will give you for 10 lakhs. If you say you want to pay that 10 lakhs in 10 years, then you pay 1,25,000 every year till 10 years. So additionally, how much you will be paying? 2,50,000 you will be paying additional amount, right? So that cash flow you have to, that means I have added some interest component to that particular lease payments and I am giving it to you on lease, right? So what the standard says is, today the fair market value of that asset is 10 lakhs. Okay. Discount the future cash flows, okay, to the present value and see what is its minimum lease payments. Okay. If the present value of the minimum lease payments is less than the today's fair market value, okay, say today 10 lakhs I am saying, but if you go for lease thing, I am saying 1,25,000, which is nothing but 12,50,000, and you have brought down this 12,50,000 to the present value, which is coming say 9,75,000, which whatever interest rate applicable, it is coming to 9,75,000, for example. What the standard says is, if fair market value of the leased asset exceeds, that means 10 lakhs is exceeding 9,75,000 or 9,50,000, then you have to consider 9,50,000 as your asset. Okay, whichever is less, you have to take it. That is what the standard says. That is from the standpoint of view of the lessee, because I am lessee, I am accounting in buying books. So whatever cash flow is there, it is with respect to me. What lesser cash flows, I am not worried. I have to see from my perspective, what are my future cash flows with respect to this particular lease agreement, and I have to discount it to the present value and check whether the fair market value of the leased asset today, if I buy it today, is more than the present value of future lease payments, minimum lease payments, then you record it on minimum lease, present value of minimum lease payments. That is what the standard is saying. Okay. In circulating the present value of the minimum lease payments, the discounting rate is the interest rate implicit in the lease. If this is practicable to determine. So, if we have sufficient information, how much discount factor, all these things, then you will bring it, you will do it. If suppose there is no information available as per the agreement, what will be the discounting factor? Then what you have to see, the lessee's incremental borrowing. Okay, suppose if the lessee has to pay today this amount, okay, he has to borrow from somewhere, right? Suppose he already, why they are using the word incremental is, if he goes for additional borrowing, suppose he already has say 100 crores of loan from some bank, and now if he has to buy this property by giving cash, then he has to go for additional borrowing with the bank or with some other lender. Then what will be the incremental interest rate? Okay, that interest rate has to be considered as a discounting factor, and you have to arrive at present value of your minimum lease payment spread over the lease period and arrive at the present value of minimum lease payments and compare that with the fair value of the leased asset and take the value whichever is less as a asset in the books of the lessee. That is what the standard says. Now, standard also gives one good example. So let us read this and understand. An enterprise, the lessee, acquires a machinery on lease from a leasing company, the lessor. So enterprise is the lessee and leasing company is the lessor on January 1st, 2020. Instead of X, I am taking 20. The lease term covers the entire economic life of the machinery, that is 3 years. They say the life of the asset is only 3 years and the lease term is also 3 years. That is what they are trying to say. So it is a finance lease because it is covering the entire life of the asset. After that, there is no use of that asset. That is why it is a finance lease. The fair value of the machinery on 1st January 2020 is 2,35,000. See, just now we discussed about fair value. The fair value on 2020 is 2,35,500. The lease agreement requires the lessee to pay an amount of rupees 1 lakh per year beginning December 31st, 2020. Okay. So, from end of first year onwards, the lessee has to pay 1 lakh every year. How many years he will pay? 3 years he will pay, because here he has given the lease term is 3 years. Okay. So, lease term is 3 years and fair market value he has given. Fair market value 2,35,500. The lessee has guaranteed a residual value. That means at the residual value, see, I am not going into definitions because there are many definitions. Okay. Whichever is getting applicable, I am telling it is easy to understand also. If I keep telling each and every point in the standard, then we will not be able to complete it in the timeline, whatever we have decided. Okay. So you can go through the definition. See here, the lessee has guaranteed a residual value. Residual value means at the end of the 3 years, if I want to take the asset, I mean the lessee wanted to take the asset, then he has to pay 17,000 at the end of the 3 years. See, to correlate this with the very common example for you, if you have not seen any leasing company audits and all, in companies, usually company offers after certain grade of employees, they will offer this vehicle, car. Okay. What they does is, they say vehicle will be purchased in the name of the company. You can use it for 5 years. And whatever the amount, say EMI amount or whatever it is, 50,000, 40,000, depending upon the grade of the employee, they will say that they will pay it and employee will not pay it. And that 50, 40,000 will be adjusted in his salary. That means his salary will be reduced to that extent, so that he will save on his income tax, right? And what is the benefit to the company? It will become their asset. Okay. And they will enjoy the depreciation during the life of the asset. And what company says is, after 5 years, if you want to take this particular vehicle, then you pay, say, 1,75,000, something like that. If you really sell that after 5 years, even in the open market as a second-hand car also, it will go for 3 lakhs, but they will give at 75,000, 50,000 just as a residual value. Okay, that means by that time, whatever the benefit the company is given to the employee is being recovered for the purpose of company's calculations. So that is the reason they are saying you take it for 50,000, 25,000, depending upon the price of the vehicle, whatever it is, they will decide that. Okay. So that is called residual value. So what in this example they are saying is, the asset whichever is leased out is of 3 years life period. And at the end of the life period, lessee has to pay 17,000 to the lessor to own the asset. Okay. That is 17,000 on December. You see here on December 2022. I said instead of X, I am taking 2. So here 2020 and here 2022. So 2020, 21, 21, 22, sorry, 1st January 2020. That means December 20, December 21 and December 22. 3 years it will get completed on December 2022. So on the end of the 3 years life period of the asset or the lease period, the residual value of the asset is considered to be 17,000. And this, apart from this 1 lakh, whatever is committed by the lessee, if he want to own the asset at the end of the 3rd year, then he has to pay additionally 17,000 to own the asset. Once he pays this 17,000, then that particular leased asset will become his asset. Okay, lessee's asset. Okay. Now the lessor, however, estimates that the machinery would have a salvage value of only 3,500 on December 31st, 2022. What lessor is saying is that the salvage value, if we go and sell this vehicle or machinery outside, it will be only 3,500. Okay, that is the reason what he has done. He is charging 17,000. Okay, let this guy take this equipment or asset, let him pay 17,000. But as per lesser's estimates, it will be 3,500. We have nothing to do with this 3,500 because we are talking in the books of lessee. As per lessee, the total payment is every year 1 lakh he has to pay. See, 1 lakh per year. This is the lease payment. And at the end of the third year, apart from this 1 lakh, he has to pay 17,000 to own the asset. Okay. Now they have calculated the discounting factor. Here, nowhere interest component is given. Okay. But they have calculated the discounting factor. So how we will calculate the discounting factor? When NPV is 0, that is the actual discounting factor, right? You would be knowing it. Okay. Now they have calculated the discounting factor as 16% in this example. Okay, I will show you that how it is coming correctly. So whatever number of years is there, I will take one Excel so that you will have more clarity. You are able to see the Excel, right?
Yes, sir.
Yeah. Year,
Clear.
cash flow, discounting factor, and amount. Okay. Year 1, year 2, year 3. Year 3 again, reason being we have residual value also. Okay, I will write here lease payment. All these three are lease payments and this is residual value. Fine. Now cash flow is we learned 1 lakh, lessee has to pay 1 lakh every year. And if he want to own the asset, then 17,000 he has to pay the residual value, right? So 17,000 I have taken the cash flow. Okay, all this will come in minus. Okay, please note it is a payment, so let us take it in minus only, so that there is no confusion. And discounting factor they have already calculated. Okay, so I will take 1 divided by 1.16, right? Then this is the first year. Please note this 1 lakh is due at the end of the first year. If you see here, the first installment is starting beginning from December 31st, 2000, not at the beginning of January 1st. Okay, it is at the end of the first year. That's why I am taking here 1 by 116 directly. If it is on 0 year, then it should be 1 only. Okay, please remember that. Then this figure divided by 1.16. Then this divided by 1.16. Then I will take the same amount because it is the same year. Okay, I will just copy the values. Now I will multiply this into the discounting factor. So present value of lease payments is 2,35,480. This is the present value of minimum lease payments. Okay. So minimum lease payments, I am using the technical word because it is given in the accounting standard. Whatever the lease payments agreed by the lessee, they are called, I will read that better. I will read that minimum lease payments. Okay. Minimum lease payments are the payments over the lease term that the lessee is or can be required to make, excluding contingent rent, costs for services and other taxes to be paid by and reimbursed to the lessor together with, in case of the lease, any residual value guaranteed by on behalf of the lessee. Okay, so not just lease payments, but also residual value should be taken as a minimum lease payments. In case of a lessor, this is in case of a lessee. In case of a lessor, any residual value guaranteed to the lessor by or on behalf of the lessee or by an independent third party financially capable of meeting this guarantee. Okay, so in case of a lessee, what is called minimum lease payments, and in case of lessor, what is called minimum lease payments are being defined in the standard. Okay, so whatever amounts that are being guaranteed by the lessee or on his behalf somebody, okay, then that particular amount should be taken as minimum lease payment. So in this case, he is guaranteed to pay. This is the present value. Okay. Actually, if you see the total amount, total payment is 3,17,000. This is the total payment, 3,17,000. And this is the present value. Okay. So this present value of 2,35,000, and I am going back to the example. Now, with what value we have to record is 2,35,480 is the present value, and fair market value, how much they have given? Fair market value is 2,35,500. 2,35,500 is the fair market value. See, actually, it is almost same 20 rupees. The 20 rupees difference is also because here we are taking decimal up to 6 digits. Okay, and we are multiplying it. That is the reason that 20 rupees difference is come. Otherwise, these two are zero. If you see the difference. So, as per this example, they have considered it as zero only. That means 2,35,000 is the. See, the lease would record the machinery as an asset 2,35,500. Actually, as per standard, if you see 2,35,480, okay, which is less. Present value is less, but still, because of the decimal issue, we are getting the difference. Otherwise, it is 2,35,500 with a corresponding liability representing the present value of lease payments over the lease term, including the guaranteed residual value. So, what will be the accounting entry in the books of lessee is okay, whiteboard is not seen well. Okay. I'm just showing you the accounting entry. So asset lease asset account debit 2,35,500 to leasing company account 2,35,500. Then when he released the payment, this amount when he has done at 1st January 2020 in this present example. Okay. Then on 31st January 2020, he has made payment of 1 lakh, first lease payment. Okay. Then leasing company account debit. Okay. Then interest finance lease interest account. See, when he makes 1 lakh payment, it is not entirely reducing the liability. There is a expense. Okay. There is a interest expense. Okay. To bank account. So we have to see whatever is the interest component with 16%, and we have to put the amount here. Say 67,000 for example, and 33,000. We will see in the example. Okay. What is the amount, and this is how the entry comes. Fine. Next, to bank account, it will be 1 lakh. You are able to see the entry, right?
Yes, sir.
Yeah, see, at first January, he will record it as an asset, and whatever the fair value is there, he is liable to pay to the lesser that he is recorded as a liability. And at the end of the year, 12 months, when he is releasing the payment, leasing company account debit 67,000, that is the basic amount, finance lease interest account 33,000, and to bank account 1 lakh. Okay, apart from this, what he will do, he will, because it is an asset for him, he will be taking depreciation account debit to accumulated depreciation account. Okay, basically this is how he will do the entry. Now let us see the standard, what it says. Okay, you are able to see the standard, right?
Yes, sir.
Yeah. Now we will go to this example where they have summarized here. See, year 1, January 1st, outstanding liability 2,35,500. He has shown it as a liability. And December 31st, finance charge he is considered 37,680 because he knows that 16% interest is there, right? So with 16%, whatever the differential amount is there, he is considering it as a finance charges. Okay. So now, if you see this is the written down. I mean, discounted value 2,35,480, 2,35,500. 16% is the implicit interest rate for 1 year into 16%. 37,680. Are you able to see the Excel?
Yes, sir. No,
See,
sir.
37,680 has come. That is what here he has taken, 37,680. You see here, my fair value of the asset is 2,35,500. Okay, I have arrived at discounting factor. You may ask me, sir, how will I know the discounting factor? We see tables, right? We have to see whenever the net present value is 0, then that rate is the discounting factor you should consider. Okay. So that is how it has come 16%. We have to do that calculation, then only we will we'll get to it. Okay. So in the given example, we are not learning discounting factor and all these things. That's why I'm not getting into it. Okay. So my outstanding amount to the lesser at the beginning of the lease is 2,35,500 principal amount. How much he is collecting from me, including interest, it does not matter. Okay. I will recognize only to the extent of principal value with liability and asset, right? 2,35,500 was the outstanding, 16% is the interest rate, and I am paying 37,680 as my interest amount. Now, if you see my next balance, out of 1 lakh, 37,680 if I deduct, this is the principal repayment. So outstanding amount at the end of the first year will be, principal will be this much. So if I take this here and I will apply same formula. Okay. Now the interest is 27,708. Okay. 27,709. Okay. Right. And same thing. I will apply the same formula. My interest is 16,142. 16,142. So every year I will charge this interest finance charge amount to my P&L, and I will reduce my liability to the extent of principal amount and show as outstanding liability. I am not disturbing the asset. My asset will be shown at 2,35,500 less depreciation, WDV, less depreciation for next year, WDV, less depreciation for the third year, and WDV. Okay. But it has nothing to do with the interest and your finance, lease finance. Okay. So that is the reason here the standard is not going into that explanation. It is saying that out of lease payment, you have to identify the interest implicit in the lease. Okay. And then you have to show the outstanding. You see here, this is the outstanding liability. It is not the asset. Asset has nothing. Here we are not talking about the asset. Asset, like any other asset, you will show this also as an asset, but only the disclosure is there that leased assets you have to show it separately, own assets you have to show it separately. Otherwise, there is no difference. Okay. Here you are recognizing the liability after considering the interest for that particular year, and that interest amount you are charging into P&L, and this amount you will be taking it to the balance sheet carrying amount. Okay. And this you see here, balance at the end of the year, there is 17,031. This is nothing but the residual value which we have considered in our calculation. See, we have considered in our whatever calculation we have done for discounting factor present value, this 17,000 is considered. So there is a liability standing at the end of the third year, 17,000. It is again that rounding of purpose, that difference is there. Actually, we have taken 17,000 only. Here also you see the standard is clearly saying the difference is because of interest rate approximation in computing the interest rate. Okay, that is why that 31 rupees is becoming difference. Otherwise, it is 17,000. And this 17,000, once the lessee pays this amount to the lessor, then the asset will be transferred. I mean, property in the asset will be transferred to the lessee on payment of 17,000 as per the lease agreement. Okay, this is the this is regarding finance lease accounting in the books of lessee. Okay, and they have given continuation of this example. The same example here, if you see here, okay, that is one example. This will complete quickly so that we will be concluding on this. In the above example, suppose the lessor estimates that the machinery would have a salvage value of 17,000 on December 31st. The lessee, however, guarantees a residual value of 5,000. Suppose the lessee pays only 5,000. Okay. See, we are talking about books of lessee. So here the lessee is paying 5,000, not 17,000. So what will be the my present present value of lease payments, minimum lease payments? Instead of 17,000, lessee is guaranteeing only 5,000. Okay, so it will become 2,27,792. You see here 2,27,805. They have given 805. Again, I told you that because of the decimal issue. Otherwise, it is 2,27,805. And what is the fair market value, fair value of the asset as on inception of the lease? It is 2,35,500. In this case, the lessee has to record the asset at present value, which is 2,27,800. That is what they are trying to tell here. See, in case the interest, the interest rate implicit in the lease in this case would remain unchanged 16% approximately. The present value of the minimum lease payments from the standpoint of the lessee using the interest rate implicit in the lease would be 2,27,805. That is what we have got, 2,27,992. Okay. And as this amount is lower than the fair value of the leased asset, that is 2,35,500, the lessee would recognize the asset and liability arising from the lease at 2,27,805. Okay, so in this case, he should record the asset and liability 2,27,800, 805 or 800, whatever, 805. Okay, then the calculations will change and interest amount will change accordingly. All these changes will happen. Okay.
Okay, sir.
Understood?
Understood. Sir, residual value based on percentage or value, sir?
Sorry?
Sir, residual value, that is one is decided by only lessee, sir?
See, it is see, the lessee means actually it is the agreement between both of them. See, lessee, that's the way here also in this example they have given to confuse. I mean, in the above example, suppose the lessor estimates. See, lessor is saying that he wanted 17,000, but lessee guarantees. See, lessee guarantees only 5,000.
Okay, sir.
See, it is agreement. No, see, suppose if lessor says you pay me 20,000, it is not necessary that lessee will pay. He will estimate. He will have his own calculations, his own understanding. Okay. then he will say, no, I will not pay you 20,000, I will pay you 5,000 only. Then in agreement, it will be given. See, this is definitely will be given in the agreement that at the end of the lease period, if the lessee wanted to take the property, then he has to pay 5,000 rupees, then it will be given. Then, because we are recording this in the books of the lessee, we have to take cash flow to identify the present value. We will take only 5,000 because that is the liability that is going to be paid by the lessee to the lessor. Okay.
Okay, sir.
And apart from this, they have said, like what I also told, I have told based upon this statement only, the lessee should, in addition to the requirement of accounting standard 10, accounting for fixed assets, AS6 depreciation accounting and the governing statute make the following disclosure of finance leases. So whatever the accounting standards applicable for fixed asset accounting, depreciation accounting has to be normally followed by the lessee. That is what the standard is saying. Apart from that, he has to do this following disclosures, which I have shown you in one of the financials, not more than 1 year, not later than 1 year. What are the lease payments which are due between 1 year to 5 years, more than 5 years. These are the disclosures which have to be made in the notes to accounts.
Okay, sir.
Okay. So this disclosures comes from this workings only. Okay, how much, suppose you are in the first year, then interest, see what is the balance period of lease payments, what is the balance minimum lease payments, all these things, interest amount, how much finance charges is balance due, which is between 0 to 1 years, how much it is, between 1 to 5 years, how much. If you see 0 to 1 year, if you see this 26,280 is 0 to 1 year. And this is 1 to 5 years, this 14,485. You have to give it in that buckets, whichever is as the standard says here. Okay, total of future minimum sublease payments. If there is a sublease again, then all these details have to be given. Now, see, I can give you a brief idea about the standard outlook and all. You have to read further. I cannot make you with my teaching an expert. Okay, see, I can give you. Because it is, if you keep teaching, I can keep teaching only on one standard for 3-4 days. Okay, I think you will understand that. Okay, if you have any doubts anytime, you can revert to me. So we will end with today's class. We will have class tomorrow also because Monday I could not take as I was traveling. We will meet tomorrow again. Okay.
Yes, sir.
Okay.
Thank you. Sir.